What's up traders, welcome back to another video. Today I thought I would go over the basics of Bollinger Bands. It's a tool I've been using for quite some time now. I think it's been working great so far, so I'm not going to change anytime soon. But I want to go through kind of the basics of what is Bollinger Band, how you can use it. This video particularly won't cover strategies because we've done another video in the past. I'll link it below and here in the corner on how to trade with the Bollinger Band. But for now I want to go through kind of the basics and things that you need to understand. Like, keep in mind, if you want to create a strategy with Bollinger Bands or any tool in the Forex market, you gotta understand how it works and what things you can look for. And ultimately, the more you do things outside of what most people do, the better it is and the more chance you have to succeed. So we'll go on the chart. I want to show you guys how that looks like, and let's sit with that right now. So here is, guys, a chart, and I'll pick a random chart. Let's say this one on, we'll go on the daily chart just for fun. And it really doesn't matter here what kind of time frame you look at. We'll just kind of pick an example and go with that. So as you can see, I have pretty much one indicator on my chart right now, and that's the Bollinger Band. I use simply the default settings. Now you could change those settings, you could change them for whatever settings you want to have. You could optimize your strategy for whatever is best for you. But in my case, I just go with the basic, right? What is normal? And that's 20 of the length and 2 for the standard deviation. I will talk about that more later, but first, what I want to go through is, first of all, understanding kind of what is on the Bollinger Band. If you've been trading with that for a long time, you probably know this, but if not, we'll just go with the basic first. So basically what you have with the Bollinger Band is a simple moving average. That's what you have at the middle of it. Okay, the middle line that we see over here, that is a simple moving average. And you choose the number of periods you want to have. Now these values above and below, they are what we call standard deviation, based on what the price did in the past. You compute standard deviation. That's a kind of big formula that you can calculate yourself. It's going to take days and you won't like it. But if you want to do it, you can do it for sure. But basically the reason why I like Bollinger Band is that it makes sense with the statistics. So if you were to study statistics like I did a little bit in university, you would understand that for whatever kind of population or sample you get out there, okay, whatever you do, you will have kind of this type of graph over here. Pretty ugly graph, but the principle is that you will have probably something that is going to look like this. So narrow at here, curve, and then equally narrow here. Okay, this is going to look like this. Now this is terrible because it should be equal. This is kind of the number of people. Okay, so here you would have few people, here you would have few people, and here you would have the majority of people or data. Okay, that would be the basic thing. Now, the rules are as follows, and this is based on what I've been taught. I could be wrong, I could be saying something stupid, but comment below if you know what it's about and how that works. What you have is the mean over here. Now, one standard deviation to the left and to the right, okay? The rule says that you have 68%, I believe, of your data, no matter what that is, okay? And I know we're going off trading a little bit, but we'll get back to trading pretty soon. It's going to be fast. I just want to explain that principle. Now, 2 standard deviation, okay? If you look at this and go from here all the way to here, 2 standard deviations, so 1 here and 2. This is 2 and this is 2. Now, those are kind of the extreme, right? The 2 standard deviation further from the mean. And this is usually including about, I believe, 95% of data. Okay, so quite the majority and quite a lot. Which means that these 2 curves over here, although they are quite lengthy, they only contain 5% of the whole data. Okay, these are pretty small in terms of number. Now you can have a couple of outliers that are going to be like far, so they're going to be here and here, but that's the principle. Now you can bring this back exactly to trading. Okay, same principle except with the Bollinger Band. So instead of being people, this is going to be price. The price is going to be over here. So 68% of the time, price should be technically between 1 standard deviation from the mean on the left or on the right, so above or below. Okay, that's going to be a basic rule of thumb we go with. Now, 95% of the time, price is going to be between 2 standard deviations. So you take a moving average, that's your mean, and that's a moving average, a average price, and then 2 standard deviation above, 2 standard deviation below. Price should be 95% within those range, and this is what we see over here when you compute the standard deviation of price for the past 20 or whatever days. And now, of course, you're gonna have some outliers that are gonna be here This is basically where price breaks outside the Bollinger Band, okay, over here and over here. So you'll see that it doesn't happen all the time. It doesn't happen every day, of course, because simply you look at something that is outliers, only 5%. So you get 2.5% of the time it's gonna break below the Bollinger Band, okay, and 2.5% of the time or so, could be more, a little bit, some pairs that are pretty crazy, it's gonna be breaking above the Bollinger Band, the higher band or the lower band. And that is the whole principle, the whole premise behind Bollinger Band and how they work. Now the cool thing about this is that you play with probabilities. And even though the numbers here are not as exact as perfect, they still reflect something pretty interesting. The fact that a small number of the time, it's going to be beyond 2 standard deviation. And when it's there, it's a clear sign that price is overbought, right? Because, or oversold, because you're beyond what is usually acceptable. And soon enough, of course, price has to come back between the bands. And two scenarios could happen here. Either the bands will expand, which we'll touch on soon, or price could pull back and just go back within the band. And both cases can happen. Just understand that they can be two different things. Now, when we keep this in mind, okay, we have pretty much how the Bollinger Band works. And as you can see, when price breaks outside the Bollinger Band, it doesn't happen too often. Now, based on how you see things, you can say 2.5% of the time price will actually close outside the band, which we don't have too often, like we have over here, over here. We close outside over here, but not over here. And we close outside over here, but that's it. Here also. Okay, a couple of times still. But we don't technically close outside a lot. We just move below or above the Bollinger Band, the upper bands, the standard deviation. But we don't necessarily close there too often. That's the particular thing with that. Now you cannot only just buy when it's at the low or sell at the top. Okay, that's a recipe for disaster. And that pretty much won't work. Unless you have some other rules around that. Now, the other thing we need to touch on is you will notice over time that price does two things. It either contracts or expands. And that is based on volatility. How far the market moves, how big it is. So some people have strategies that work well when the market is volatile. Some people prefer to trade when the market is narrowed. Although few people do that. But if you look for a certain volatile market, what you could do is that you can simply look at the Bollinger Band, identify whether it's contracted or narrowed, and then you can decide if you trade or not, if that makes sense for you to trade on a lower time frame. So if this on a daily chart was to be like this over here, so you have the outer band here, this one over here, it's pretty large. So good place to trade because you have some room for price to move. If it's narrow, like here it doesn't happen too often, but like if you get narrow like here, okay, more difficult to trade. Although it's going to break out at some point. This is kind of the stuff we cover in the video on strategies, which is going to be linked below. What to do when that happens. You can have a very good trade with that, okay? But in the meantime, you can look for these areas, and it kind of gives you a good idea of price action. Also, another thing you can use, I've seen a book talk about that thing before. What you would do basically on TradingViews, you would go into indicators. You would search for Bollinger Band width. Okay, so this is an indicator that's going to be below, kind of like the RSI, but giving you the width between the two bands. Okay, it's pretty interesting. So some strategies work well in that. For example, if you look at breakout strategies, they will work better on this particular time frame when the band is narrow, right? Because they tend to work better when price is consolidating. So if you trade breakouts when price is at big level and really volatile, it's not more conducive to fail, probably, because you want to maybe use that. And so what we see is that here the bands were really contracted, as opposed to, let's say here, they were pretty narrow. So a good place to look for breakouts. And that's kind of what happened over here. So those are things you can use, but this is not something to be used alone by itself. Just to give you an idea of like how the price behaves, what the market does, and stuff like that. It's pretty interesting overall. And now the way I chosen to trade the Bollinger Band was at these extreme points, at the top of the band, low of the band, because I see myself more as a reversal trader. The cool thing about this indicator is that you can trade a bunch of things, and depending on what kind of stuff you like to trade, you could probably trade it very well on whatever time frame, whatever instrument, whatever technique, and by combining other things as well. I don't think this is meant to be used by itself, and as a matter of fact, John Bollinger, the creator of that tool set it himself. It's meant to be used in other combinations. So you can combine this with the MACD, with the RSI, and we've done some other example which are going to be linked below, of course. You can see how I trade also below. But just to finish this video, because it would be like stupid if I were to show this and not talk about trade setup a little bit. So I want to show you guys a trade setup that happened today. This was on AUD USD. So price was reaching 0.75, a good support area. Now, see how we talked about this earlier, the fact that we look for these extreme of the Bollinger Band. Price pushed up over here at the support, well, a little bit below, but doesn't matter, we still trade that. And then push above, so came back down. And then we went to the low of the Bollinger Band. And I like to combine the Bollinger Band at an extreme. So here price was really oversold because it simply closed outside the Bollinger Bands, outside the lower band. Okay, so it's sign that it's oversold. And what we have next is an engulfing candle, signifying that price could reverse, right? This is a reversal signal. So you combine oversold with reversal. Good setup to say that price could reverse. Not always, but could reverse. And that is, of course, a game of probabilities. But the way you do this is you enter above the high, a stop loss below the low, and reward to risk of whatever. I do 3 to 1, okay? And you'll see why in other videos I talk about this, why I do 3 to 1. But basically 3 to 1, I think would have been a little bit above over here. And this is an example of trade that happened with Bollinger Bands, combining extremes with a sign of reversals, and that's how I use it. So hope that makes sense, guys. This has been fast. I wanted to do a video more short today, but it looks like it's still the usual time as always. Comment below with your thoughts below. Let me know what you think of those videos and what you think of that. If you use Bollinger Band, also question of the day, comment below how you use it, what you prefer about it, and we'll talk about that in the comment below. Thanks for watching, and I'll catch you guys tomorrow. Ciao.